I've spent 25 years raising capital for my own startups, and there are a few lessons that I've learned that I'd just like to share with you. First of all, the temptation sometimes is to go into the big VCs and thinking, I'll send them my business plan. They're going to look at it and they're going to write me a big check because I read about so and so company did this. And the reality that just doesn't happen. The chances of them even looking at your business plan are almost zero. The best place that you're going to get for raising capital is always going to be from people you know. And that's going to start with your friends and family circle. And that's going to be like your parents, your brother, your sister, your friends, because these are people who know you. And at the end of the day, it's high risk capital. And those are most likely going to be the people that buy into your story and want to invest in and support you. Another thing too is you want to keep your pitch like really short. It should be no more than like 2 to 3 sentences. If you can't explain your idea and what you want to do and how you're going to accomplish it and what the potential reward could be, and you can't do that in 2 or 3 sentences, then you probably don't even really understand it that well yourself. So you need to go back, refine that elevator pitch, and make it so that if you know that time when you do have an opportunity to speak with a friend and they're asking, hey, what you're doing, you just need to be able to explain it really, really clearly in a very short period of time, and they either get it or they don't. Another thing too is it's really important to tell everybody that you know, because you just don't know where it's going to come from. I've many times I've gone out and talked to different investors, and often it's not the person that you think is going to invest is going to be the one who's most likely to do so. So an example would be, say it's that guy that you went to high school with, and he's done like really, really well, and he's made millions and seems to have like a lot of money. You say, well, that's going to be the one for sure because he's investing in lots of stuff. And you pitch him, and it sounds good, and he says he's interested, but it just doesn't go through. It doesn't happen. Yet you'll mention it to someone else, again, maybe a friend, but you don't really know what they're doing or what they're working on. But you think, oh, I'll just casually mention it to them. And then you find out that later on they actually ask you, they say, hey, that business, so is there anything left in that? Like, do you think I could buy something in it? And without any doubt, often they're writing a check for like 10 or 50 or $100,000. It almost always seems to come from where you least expect it and not from where you most expect it to happen. So you want to reach out to as many people as you can. An anchor investor is super important as well because nobody wants to be the first investor in your company. Everybody wants to know that someone else is being in there first because it's almost like a pre-approval. And that builds that FOMO, that fear of missing out. Once so-and-so finds out that, oh, hey, so-and-so invested in it and, well, I don't want to miss out on that. I want to get on that too. Is there anything left? And that you want to build that up. But the anchor investor is just like super important. So you want to make sure that you've got that lined up as well. Another thing, I think it's very important to be very honest with your investors about just exactly what they're investing in. And by that, I don't mean the opportunity or the potential, but actually the risk involved. And at the end of the day, your business is a high risk enterprise. Doesn't matter how good you think it is, how much time you've spent on it, what the potential is, how thoroughly you've looked at all the potential pitfalls and the concerns that where it just might not work out. There's a great deal of risk. There's so many things that go wrong, and most businesses go out of business, especially in the technology space. And your investors understand this. Typically, investors that are investing in your business, it's sort of that small percentage of their portfolio that is for higher risk investments. But I think it's very important to just be clear, like at the end of the day, this is capital that they're probably going to lose. And that's just the reality. The flip side is if it does work out, then the return is going to be great. But there's no sure things. It's high risk capital, and that's just the way that it is. And I think it's important to share that information because it adds to the authenticity of your story and the trustworthiness. And I think that's very important as well. Skip NDAs. They just don't work. Nobody will sign an NDA, and it's just a roadblock. And no matter how good you think your idea is, you can be almost 100% certain that there are at least 10 other people that are working on exactly the same thing, and probably hundreds or thousands that are working on something similar. Today it's all about execution. It's all about speed to market. It's just about getting it done. It's about, hey, here's an idea. How fast can I get some customers? How fast can I prove that it works? So stay away from the NDAs. Never ask anyone to sign an NDA. And the other thing to consider too is that NDAs they're only worth your ability to defend them. So, and that could be limited in the future. So stay aware from that. You just want to make it as easy as possible for people to hear your story, to look at the business plan and make a decision. And I think also very important is that investors are investing in you at this stage, at the earliest stage. The people that are going to be investing in you are people who know you and they trust you and they believe in you. They are investing in you more than the business plan. They want to know that, hey, if something goes sideways or the business plan isn't going exactly as you expect, that this is someone that's going to stick with it, that they're going to find another way, that they're going to try to make it work. They're not going to run off and start another business. That's what they're really investing in. They are investing in you. They're not investing in the business. That's the biggest thing that you're trying to sell is yourself. So it's an extremely important point. So these are some points. I've got a whole bunch of other ones that I'd like to go through as well, and I'll do that in another video. But those are some basic ones that just sort of came to mind today, and that I really wanted to share.